here's where the point was yesterday was all I did was put a fib on this, right? This here was a move, right? This was the most recent move. Here was your top, here was your bottom. I'm thinking, okay, this is a bounce, right? You've got an A, a B, a C, and this is a D leg. It's broken the midpoint. I have reason to believe that this is going to continue. So I'm looking at this from a standpoint of, okay, is it overdone? Is it overextended? Is it overbought, right? The answer to that is, well, it hit an extension. So yes, is it at all-time highs? No. So if I did try here, I would have been out very quickly. The next place for me to look at trying is either at the all-time highs or the fib. Yesterday, it got to the fib and tape started to change, right? So then let me come in a little closer on this. So what I did, I missed the first scalp. I was kind of asleep at the switch because I was trading and watching other stuff. All right, so September 1, so let me grab a fib. So now we were looking at, so here was our bar. This thing just screamed right off of the open. And then you had the high of the day, which was just above the big fib. And I know that this can start to look confusing, right? So let me just take the big fib off to give you some clarity. But what's important about it is that, based on time frame and based on longer time frames, these levels are more important than the shorter time frames. The shorter time frames don't have the same level, don't have the same strength in support and resistance. They're quick, right? It's a very short fuse. And you have to know that if you're scalping, right? So you have to separate a longer term view to a shorter term view. That equates to the duration of your trade. Because if you don't do that, you're gonna get run over. You have to separate those two. So number one, it's hitting an area of a spot where I was interested in saying, okay, if you're going to try for a short, this is an area to do it, right? So you get this area, then I draw the new fib. So here's the top of the move, right? So what am I looking for? I'm looking for a move, a flush. Let me just zap this out of here so that clears that out for you guys. I'm looking for a flush, right? So I'm looking for a flush. Number one, this flush down to this line. I mean, look at this. This was from here to here. Not a whole lot of messing around. It just took it. And then it bounced back up. And on this bounce back up, I was still looking at this and I watched this thing come down and not touch this fib, right? So then, what am I looking at? Well, now I'm also putting some anchors onto my trade to try and figure out if I can be in this or not. Okay, so there's my anchor. And look at where it checked up to, right? Now, here's my other anchor of this is where I was thinking it would top out. Okay, so this allowed me in this flush to look at this and say, okay, it's reasonable since it didn't touch this fib on a bounce up. It's reasonable for me to think because it hasn't violated not only the top of this fib, but it hasn't violated the anchored VWAP off of the high, that this is a decent area. This is also a decent area to try for a short. So this is where I jumped in. You've got this flush. I was looking for the fib and the anchored VWAP as a target, and we got it. Right? So that's it from here to here. And that's a $2,000 trade, guys, in 10 minutes, right? So do you see how layering the different tools that you have will give you areas that you can try those trades? That makes sense?